Hello everyone, I'm back again with another video on depreciation. In this video, we will actually discuss about the different methods of calculating depreciation and how we can actually calculate the values of depreciation in different methods. There are usually three different methods with which you will be tested during the exams. So first of all, let us know the names. The first one is straight line method, and the second one is reducing balance method, and the third one is revaluation method. You actually need to know only these three methods. Now, in straight line method, we actually undertake the simplest way to spread out the total cost of the assets throughout its useful life. And in this method, the amount of depreciation remains same every year. That means in every year, the amount of depreciation we are going to record in the income statement will be the same. Okay, we can actually calculate depreciation in straight line method in two ways. Number one, the first one, we can use the formula cost minus scrap value divided by useful life, and then the number two, depreciation is equal cost into depreciation percentage. In revaluation method, we actually try to revalue the assets value at two different point in times, which is at the beginning of the year and at the end of the year, and find the difference of the two values of the asset after adjusting the acquisitions and the disposals. So we will try to find the opening balance, and then we will find the closing balance, and after adjusting in between the acquisition and the disposals, we will try to find the difference between the closing balance, and this difference will actually give you the depreciation. In general, we actually use this method for assets like loose tools, office equipments, which we actually buy in bulk. But the thing is that these assets are actually in small economic life, but as we buy them in bulk and we don't need to buy them frequently actually, so we categorize this as a non-current asset. Now, to find the value of the depreciation in this method, we actually need to calculate the total value of the assets in hand, which is the opening balance, adding the acquisitions or the new assets that we have bought and deducting the assets that we have sold. This is the value of the asset which we should have in our hand or in our books. But due to depreciation, the closing balance will be lower, and this value, the difference between what should have been the value and the closing balance that we are actually have in our hand right now, is the depreciation. I think that's all. I hope this give you a fairly clear idea about how depreciation works and how they are calculated. In the next video, we will talk about what are the different types of accounts we need to prepare for these topics. Okay, thank you, goodbye.